most of it. The rest of it is all like more like gravy. So you want to look at a nice price action right before the entry. You want to avoid big gaps. You want to avoid channel down moves. You want to avoid spikes. Anything that doesn't look clean, you want to avoid. And one thing I didn't mention is you want to try avoiding doing a trade right before earnings as well. I didn't mention it on here, but that's another kind of a given. So you don't want to be doing these things right at earnings times. The next thing is location. I didn't cover location here, but basically we want to be doing it mostly above the 200 period moving average for pullback setups. For reversals, we do other things. And then we want to look at what kind of setup bar did we get? What does it look like? Is it a nice looking bar? Is it too big? Is it too small? Does it look nice, basically? And lastly, we look at the candlestick pattern. There are 3 candlestick patterns that I really focus in on, and we'll cover those when we look at some examples. So, but that's the bottom of the list. So a lot of people really focus a lot on candlesticks, but really candlesticks should be on the bottom because by themselves, they don't give you enough conviction on a trade. They're like the gravy, the little dessert at the end. If you do get a nice candlestick pattern, it adds to the setup, but you can't take a trade just off of a candlestick pattern. So let's actually look at some example setups. I only did 3 examples. Normally I do like 10, 15 examples when I do my normal presentations, but today I thought I had to limit it to an hour, so I only did 3. So what I did is I did 3 old setups so that we can look at how they turned out, and I did 3 current or recent setups so we can see what they look like right now. And since Dennis says we do have time, we can actually look at some live charts. And we can look at some live charts and look at some setups on a whole bunch of other stocks as well. Now keep in mind, I just picked 3, but once you start doing this stuff, you will find there are hundreds of setups, sometimes thousands of setups. So the difficult part is not identifying the setup. The difficult part would be identifying the best setups and identifying which one should I do. I've got 1, 2 really, really good stocks with beautiful setups. Everything looks ideal. Which one do I pick? And if you've already got a trade on, and which one do I sell to take this trade on? You know what I mean? Like, how do you judge all your entire portfolio? How do you decide which ones to keep, which ones to get rid of? And of all of the potential setups, which one to take? And, naturally, the ones Murphy's Law tells you, the one that you take is the one that's going to be a loser, but not always. But that's the hard part. The setup is not the hard part. The hard part is the judgment that comes afterwards. And that's why you want to build up your expertise. So over time, you do enough of these things. Once you get the setup down, like I said, everybody sees the same setup. So it's going to be your level of subjectivity on top of the setup. So here's an old example of a classic combo 1 setup. Basically, you connect the 2 dots, draw a trend line, connect the 2 dots, got a trend channel line intersection. And likewise, this was your trend channel line at the band 1 spot, telling you this is probably over at this spot. So this is a pullback setup and expecting the trend to resume. So this was late last year. And this is Hershey for a big cap, mega cap stock, maybe for a longer term account. So pullback coming to prior support. This is a combo 2 setup. So your risk here is small. The risk is right in this vicinity. Your target is up here, up here. And if it's a long-term account, you can keep holding this for a long, long time. Now here's an example of something I call a BU2 bar, which is an inverted hammer, which is this little guy right here. You see this big tail on top with a tiny body. These inverted hammer patterns are phenomenal when they appear at the setup area. So very important that they have to happen at the setup area. It's not valid if it happens at other spots. For example, it happened up here. So the same candlestick pattern, when it occurs here, it's not bullish. When it occurs here, it's bullish. When it occurs here, it's not bullish. So that's what's really confusing. And anybody who ever backtests candlestick patterns, they'll tell you this stuff doesn't work. It's nonsense. Why do people waste so much time doing candlesticks? And the reason is because they're not doing it at a particular spot. So when you can add a nice candlestick pattern on top of a good setup, the probability goes up. So that's number 6 in the list of items that we have. So number 6 is the candlestick. So this is, I call it a BU2, a bull in an inverted hammer pattern, a big tail on top with a small body. Now this is, I call this a BU1 bar, which is called a perfect reversal bar. Brooks calls it a perfect reversal bar. Basically, you've got a big tail on the bottom with a strong body with a close near the top. So that's, I'm sure there's a better term for it, but it's basically a nice, well-formed candle that's telling you the sellers rejected it, it came back up, and we're ready for a nice bullish move. So we look for, this is BU1, and I call this BU2, and we'll look at some other stock setups, and we'll look at the other candlestick pattern. Let me see if we see any here. Here again, we see like an inverted hammer. Ever so slight. It's not that big, but this one right here, that was kind of a giveaway. And the inverted hammer doesn't have to happen at the bar, at the setup bar. It could be anywhere in that area. As long as you're in that vicinity, that's usually close enough. So let's keep looking. Excuse me. So this is another IBD stock, OLED. Again, trend channel line pullback coming in. In this particular case, there is no trend line. There is no prior support. You got nothing. Basically, just a plain trend channel line pullback. In this particular case, we've got a trend channel line pullback intersecting prior support. So this was your entry bar right here. And here you can see an inverted hammer pattern in there, stuck in there right there. Like I said, that doesn't have to be a setup bar. Anywhere in there is good enough. And you'll see it all the time. You'll see these little guys pop up. In fact, there's a little one in here as well. So those are all little confirming indicators telling you you've got a potential trade in there that might work. So now here's an example of a reversal trade. These are pullback trades, meaning we've got the trend, we got the pullback, we're expecting the trend to resume. We got the pullback, expecting the trend to resume. And as I said, pullback trades are always less profitable, but they're much higher probability. But a reversal trade, something like this, are lower probability, but the profitability is dramatically higher. So here, your profit was just from here to here, or something in this range at least, maximum up to here. Whereas here, same setup as a reversal, you come in here, you're risking a little bit here, reward is like, how much is that, from approximately maybe 100 or something like, maybe 90, 100 to 200. It's at least 100%, something in that range, 80, 90, 100%. Whereas here, all you're getting is 30, 40%. In this case, maybe 20%, something like that. So that's the trade-off in a pullback setup. You're not going to make as much money, but you've got the probability. And as I said, when you're starting out, you just do the pullbacks, get really good at it, just consistently do pullbacks, make sure you know how to identify them, how to trade them, get good at it, and then you move into the reversal setups. And once you get good at it, you'll find yourself doing more and more reversals and not doing the pullbacks. I hate to say that, but unfortunately that's what happens, because you get used to the profits, and then you say, man, I don't want just 20%. I want those big moves. Even if you don't get them, the potential that you might get them is what drives you to do that, because your risk is so small. You'd much rather get a one bagger than a 20% or a 30%. I'm not saying that 30% is bad, but it's just once you're used to it, you want the bigger returns. So let's look at some recent, this is still another old example. Here's ENPH, and we talked about this at the last meetup as a potential end of trend reversal move. So, but here was the pullback setup. prior to this big spike up. Here again, connect the two dots, extend it forward. Here's your trade. Entry above the high of the green bar. It gave you no heat, meaning the heat, what heat means is how much it moved against you before it went in your favor. And a lot of these trades, you'll see that they give you very little heat. It just goes in your favor right away. And if it does give you heat, it would be in the form of a retest rather than like a real big move down. And keep in mind, your stop is under here. So it's like very little. You're not uncomfortable. You don't get that heat because it's just, even if it's not going in your favor, you know that it's not going against you. So here's a nice move up. It's up 229%. This is an unusual case. Most pullbacks don't give you this kind of reward, but this happened to be an exception. This one gave you a massive reward. Likewise, here's a bearish setup, a bearish combo 2 setup, a trend channel line intersecting prior resistance. Is this a high probability trade or a low probability trade? The answer would be low because it's a reversal trade in a strong uptrend. So these are reversal trades, but when you do get them, they're nice, but they're low probability. Chances are these are going to fail. Most of these will fail, but when they do work, they work really nice because you get nice big moves here. With that being said, these are old setups. Let's look at some recent ones in the last few days. Now here's one we covered at the last meetup. Basically, this is a contractor called Perspecta, and this is an IT contractor, and it's basically again a trend line intersecting a trend channel line. So the setup occurred here. Now, one of the things you'll notice is this is a big green bar. What does this imply? It implies that you don't have a decent low risk entry on this spot. So what can you do? You can either lower your position size because your risk is going to be from here to here, or you can wait for a retest.